Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I want to talk to you about a great trading technique that really works. And when I say really works, it really does. I use this technique all the time, and with the help of a simple tool, you'll be able to apply this as early as today, if you'd like, with the aid of this tool. And it works in any market and any time frame. That's why it really is a great technique. For example, let's look at this chart here, just to show you how it works and to show you how most traders fail. We look at this chart 5, F-I-V-E, okay? Once again, most traders looking at this wouldn't do anything. It's a sideways market, right? You're always taught to stay away from those kind of whipsaw markets, but this tool actually would have identified a buy signal right here at the very low. And then if you miss that one, another buy signal right here, where you could have taken advantage of a nice 40-point gain in the next day. So this is what we're going to be talking about in today's educational presentation, a trading technique that really works. Here's the beauty of this technique. It's one click away on the PTS Primo charting platform. All you have to do is click on this tool and you'll be able to see these techniques and find them for yourself. It's an educational platform that actually teaches you how to trade. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. If you're new to my presentations, you'll see today that we're all about teaching you. If you've come here, in other words, thinking that I'm going to tell you what the market's going to do, is it bottomed out, is it going to go straight up, or are we going lower, or are we not going to do anything till next year? You've really come to the wrong place. That's not what we do here. I know a lot of webinars you may have attended in the past do that. They tell you what perfect stock to buy or the market to be trading. We don't do that because, think about it. I mean, I started trading 45 years ago on the floor of the Pacific Stock Exchange. I was taught the same way, most likely you've been taught years later, in that you're supposed to listen to someone or something tell you what to buy or sell. Well, I did that when I first started trading and it didn't work at all. So there's absolutely no reason why it should start working now. In my 45 years of trading, I have found out that the only way one becomes a consistent trader is by making your own trading decisions. So that's why I teamed up over a decade ago with proprietary strategies, and we formulated Specialist Trading with one goal in mind, and that was simply to educate traders so that you could ultimately make your own trading decisions, okay? Most traders take themselves out of the game by listening to someone or something else. What we want to do is put you back in the game, and you'll see that attention to detail in today's educational class. Now, once again, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique that really works. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now remember, if you haven't done so already, please feel free to follow us on Twitter. I post a lot of different snapshots on a daily basis. We post some signals that our strategies or methods have generated. We also post financial bits of wisdom. So lots of great free education on a daily basis. So please follow us on Twitter. Now remember, as we stated in the beginning, we are an educational company. This means that our goal is not to force feed you signals. We don't want you to come here today with what our opinion is of what's going to happen. In fact, we don't even have an opinion. In Specialist Trading, our goal is simply to learn how to listen to the market and then follow it. We don't really try to predict if something's going to go higher or lower. We don't try to pick a top or a bottom. That's what most traders do, and that's why 80% of all traders fail. All we try to do is teach you how to listen to the market and see what it wants to do, kind of like a river, and then just jumping on board and just going with it. That's really the key to success, to listen to the market and then to jump on board and do whatever it wants to do. So, as you can see, my goal is not to force feed you signals, but to teach you how to trade with the Specialist Edge. Some 45 years ago, when I first started trading, and I was struggling tremendously, using probably the same things that many of you are using because they've been around for that long. Well, my mentors took me aside and shared with me all the things that I teach my students now. And these are the things that have sustained me now for over 4 decades, and that's what I want to do with all of my students, hopefully some new students, okay? All right, so let's begin today's presentation. Remember, if you have any questions, let's wait till the end. I promise I'll get to them at the very end of class. This is being recorded, so if you have to leave early or if you're having technical issues, every one of you will get a link to this recording. All right, here's what my mentors taught me. They said, Steve, the secret to consistency, as I said earlier, is simply to want what the market wants. You see, what we usually do as traders is overcomplicate things. We want to try to predict how high or how low something will go, or we want to try and figure out what the earnings mean or what this new economic indicator means. And that's what gets us into trouble. Or we basically let go of everything and say, listen, why don't you decide for me? So we go to some chat room and let some guy trade for us or make our decisions, or we wait for the guys on TV to tell us what they think is going to happen. This is why most traders fail. Upwards of 85%, close to 90% of all traders fail. And when I say fail, I don't mean you're going to have a bad couple of weeks or a bad month. It means that you'll eventually give back all of your hard-earned savings that you put aside for trading. So we don't want you to get into that 90 percentile. What we're trying to do is make you a consistent trader. And so the secret to being a consistent trader is simply to want what the market wants. In other words, it's not to figure out the earnings. It's not to know what the jobless claims mean. And it's not to follow some guy on TV. It's simply to listen to the market and see what it wants to do and then jump on board. It's not any more complicated than that. The trouble is we're never taught to do that. We're only taught to listen to someone or something tell us what we're supposed to do. That's why most traders fail. But look at this example here. I'm sure a lot of you would say, well, Steve, yeah, I do listen to the market. I don't follow a lot of that other stuff, and I like to look at the charts, so I'm still having a tough time. For example, someone looking at this would say, well, Steve, yeah, it's easy to see that the market wants to go lower, so I'll go with it, the way you say, right? I'll sell short or I'll get out of the market. I'll sell my position. I don't want to be in a downtrending market. And then this happens, right? So then at this point, you say, well, I listened to the market and it didn't help me because, it changed and I didn't know when it wanted to go back up. Well, in order to get in sync with what the market wants to do, what we need is a tool that translates what the market wants to do. See, it's not just enough for us to look at the chart and say, okay, well, the market wants to go higher or the market wants to go lower. We need a tool that's translating for us because the market is really speaking a language all the time. It's always sharing with us what it wants to do and what it's going to do. The only trouble is we don't understand it. We don't understand this language. It's as if someone is speaking French to us, and we don't understand French or Spanish or any other of the numerous languages around the world. We just don't get what it's trying to tell us. So we need a tool, we need a translator. And this is what we're going to be talking about today. That tool is the PET-D. This is one of the first tools that my mentors introduced me to some 45 years ago on the floor of the exchange. Now, the only trouble was it's extremely complicated to figure out. It's a formula. In fact, we used to call it the formula because you had to calculate this by hand. And it's very difficult to do it on a tick-by-tick basis because that's how sensitive it is. Here's the good news. We've taken all of the hard work out of it for you. Now, for those of you who are still not familiar with what the PET-D is, as we said, it's a proprietary algorithm, something I learned decades ago. And don't worry, we've kept the calculation in-house, we kept it proprietary, but that's good news. That means you don't have to worry about figuring it out. And the way we've discerned it is by formulating it into a color bar tool. You'll just see a series of two colors, green or red. That's it. So every bar, no matter if it's going straight up or straight down, no matter if it's going sideways, will either be colored green or red. Now we can use this as a signal confirmation tool. If our strategy or our method tells us to buy or sell, well, we can confirm this with the PET-D. But here's the simplest and the way that's going to help us today, a way in which to apply it, and that's as an early trend detector, because it's so sensitive. It's really calculating and formulating its proprietary decision-making based off of what the market wants to do on a tick-by-tick basis. It's so sensitive, it can tell us in advance way earlier than most trend devices or other tools you may have used in the past. For example, let's look at that picture once again in Zion, Z-I-O-N, all right? Remember, it was going straight down and then it quickly went straight up. Well, once we add the PET-D on our platform, simple as just clicking on PET-D in the green strategy tab column, and then we see the colors automatically change, all right? They're either going to be red for a downtrend or green for an uptrend. Now remember, the PET-D is not designed to pick a top or a bottom. It's simply telling you what the market wants to do at that moment. Now here we knew well in advance that it wanted to go lower. And look what happened. We could have avoided all of this loss and gotten out of the stock. And then right here, even though it didn't pick the bottom, we knew with consecutive green bars that it wanted to go higher. So we knew well below the top that it was changing trends. That's how simple this is. But we just don't want to buy when it's green and sell when it's red. We need a little bit more structure. So this is what we're going to be talking about today, trading technique using the PET-D, okay? All right, so let's get right into it. What are we looking for if we want a buy setup? All right, here are the rules now. We're looking for two green bars that are generated by the PET-D. In other words, whatever time frame, whatever market you're looking at, we want to see that both of those bars are green. All right, so here we have bar number one, bar number two. Now this is just the static, way we're looking at charts, but once we add the PET-D, we see that it's colored them both green. Now remember, if we backtrack, and if you know candlesticks, this was an up bar, opened here and closed higher with the white body, and this was a down bar, opened here and closed lower. We're not interested in whether it closed up or down. All we're interested in is the color. So as you can see here, the PET-D colored this green, this up bar green, but it also colored this down bar green. This is where a lot of beginning students have trouble. They say, well, I don't understand, Steve. The bar was down, but it's colored green, meaning that that's in an uptrend. Well, sure, you can have a down day in an uptrend, just like you can have a cold day in the middle of summer or a warm, hot day the way we're having out here on the West Coast in the middle of winter. So there's nothing wrong with it being out of sync with the direction of the market, okay? So we have two green bars, okay? Now, once these green bars are generated right next to each other, we want to see that green bar number two closes below the low of green bar number one. All right, so let's go back and look at this two-bar pattern here. Both bars are green. We want to see that green bar number two closes, which is right here, closes below the low of bar number one. Well, here's the low of bar number one. And when we say low, we mean the extreme low, the low of the wick. All right, so if we paint an imaginary line right here, we closed below. Okay, so what is that telling us? That's telling us that we're setting up for a buy. This is a buy setup. This means that you could buy at the market. You could place a limit a little bit lower, a little bit higher if you want, right at the close. It's up to you, but the market is telling you, not me, not some guy on TV, not some guy in a webinar, not some earnings report. It's the market, the chart in front of you. It's telling you it wants to go higher. And what a great edge to have a signal coming from the actual thing you're trading, not from an outside source. All right, what if we want to go short, or what if we want to use this as an exiting tool? Okay, well, we just simply reverse the process. We're looking for two red bars that are generated by the PET-D. For an example, we look at these generic bars here. Here's a bar, it closed lower, opened here and closed lower, and bar number two closed and opened higher. All right, now this is not a candlestick pattern. We don't care if one closed lower, one closed higher, or vice versa, or if they both closed. All we care about the color, that when you have two bars next to each other, they're both red. And as you can see, this bar is red, and it doesn't mean it's red because it's down on the day, because this bar is up on the day and it's red. This is just, once again, it would be the same correlation as having, somewhere you live in the United States being 80 degrees on Christmas Day in the middle of winter. It's happened before, and it doesn't mean that, well, winter's over, winter's going to be over months in advance. No, it just means it's an aberration, and this will happen. So even though this bar closed up, it's telling us that the trend is still down. So now we go to the second part of the process. Once we have two red bars that are generated next to each other, we look to see that red bar number two closes above the high of red bar number one. So as you can see here, here's red bar number two. We want to see where the high of number one is. Well, right here where this imaginary line is. Did we close above? Sure we did. So once we close above, the close is above the high of bar number one. What is the market once again telling us? Not me, not someone else. What is the market telling you? It's telling you it wants to go lower. That's a sell setup. You could sell at the market. Let's say you were long a stock and you got this pattern. You could exit your position here and know that most likely you're going to save yourself some points to the downside. You could go short, you could buy puts. Remember, you're in charge. As I said in the beginning, our goal is to provide you with high quality, high consistent information that has stood the test of time so that you can make your decisions, not us. You should never rely on anyone or anything else to make your decisions. You should be able to make those. The good news is that we formulated specialist trading to provide you with entries, exits, strategies, tips to help you make your own decisions. Okay, so let's see some recent technique examples, okay? Now we know exactly what the process is, how simple it is. Let's show you how this could have helped in the last month, some of these in the last week. Remember, everything you're seeing today comes from a snapshot on our platform. Show you how simple it is to apply this trading technique by using the PTS Primo charting platform. Okay, let's look at buys first. As we see in this chart of BABA, okay? Someone looking at this would say, yeah, we're in an uptrend, Steve. I'm long this stock. Maybe you bought it right here, and based off the gap up, and you're saying to yourself, wow, this is looking pretty good, and I've got a nice profit here. And then all of a sudden, maybe you go to that chat room and that guy says, hey, we're overbought. All of the indicators are telling us we're overbought. And so most likely this is topped out, probably going to make a new low. So I would sell your position, and you're wondering about it. And you say, okay, well, this guy sounds pretty good. So I'll get out. I'll take a small little profit, nothing big, but that's okay. And for the next 3 days, looks like he was right. You say to yourself, hey, this guy's pretty good. I'm going to follow him. All right. You think we're in a downtrend, and you're going to wait till it gets down here to buy because he says it's going down and going to make new lows. All right. But what is the market telling us? You see how my decision was made off what some guy in a chat room is saying? What is the market telling me? Well, best way is to click on the PET D. And are we really in a downtrend? Well, once we got up to this high here, we had 3 lower closing days, but look what happened. They're all colored green. So even though it may be going lower, the market is saying we're still in an uptrend. Why would you want to sell if the trend is still up? This is actually an opportunity to buy more. Now we look for that 2-bar pattern. We haven't seen it anywhere here, but let's see, bar 1. If we look at this bar 1, bar 2. Nope, we didn't close below the low. What about this one? Bar 2. Oh yeah, this closed below the low. Bar 1, bar 2. So that's a buy. But guess what? If we look at this as bar 1 and bar 2, bar 2 closed below the low. So here's another buy. So we have 2 areas to buy here. So where we thought we should be selling or getting out, we actually should have been getting in, and we could have taken advantage of a nice 17-point gain. Now, let's say we missed that. Well, this is the beauty of this trading technique. It's always generating more and more setups. If we look at this again, bar 1, bar 2, 2 closed below the low of bar 1. Both bars are green. Or we missed this one. We still could have taken advantage of this and bought somewhere around 88 and made a nice 7 points in one day. Let's look at this example here we looked at earlier. This is in the stock 5, FIVE. Once again, most traders will say, hey, well, Steve, that blog says this is a sideways market. Don't want to touch this, right? Well, is it really sideways? Okay, it may appear to be going sideways. And before waiting for it to break out, why don't we see what the market is telling us? Let's see what the translator is saying. Click on the PET D. And even though it may be going sideways for now, all of the bars are green. It's telling us that most likely we're going to go higher. Until you get 3 to 5 consecutive red bars, it's telling us it wants to go higher. So why would you think that this is in a sideways market? It's actually just setting up to go higher. Now we see a bar number 1 and bar number 2 here, and then we see another one here. So we had 2 chances to buy. One right at the very low, another one a little bit later, and we could have taken advantage of this nice 40 points. AVGO, okay? Looking at this, well, we're going up higher, but what do we have here? So if I backtrack, this is a candlestick pattern. It's a negative candlestick pattern, but once I apply the PET D, we see that all the bars are green, so we don't want to sell into that pattern. So we have, look here, we have bar number 1, bar number 2. Bar number 2 closed lower than the low of bar number 1. So that's a buy setup. So where the candlestick pattern may have been telling you to sell, you're actually buying. And look what happened. 80 points in the next couple of weeks. See, this is why most traders fail. We're listening or making our decisions based off things that have no levels of consistency. Take it from someone who did all of these things over 4 decades ago. They don't work. Sure, every once in a while you'll get a nice trade, but over time you're going to give it back. Look at your trading account. Most likely you've given back a lot because these things really don't work. You have to make your own trading decisions. This is just a technique. Where you decide to buy, where you decide to exit is entirely up to you. Let's look at this example now. After we see more signals generated, here's an MMAT, okay? Now, sure, it was originally going straight up, then it's going straight down. So you say to yourself, the action's dead, it's time to get out of this. But if we apply the PAT D, we see that, wow, even though it's come down, the bars are still green. And if we look at that bar number 1, bar number 2, we see it right here. Here's bar number 1, bar number 2 closed below the low. So there's a buy. And right here, another one. Bar number 1, bar number 2, close below. So we have 2 buys right where it looks like we're starting to go much, much lower. And in the next couple of weeks, it went up a point, nearly a point and a half. I know a lot of you say a point and a half. That's not a lot. What's the big deal? Remember, this gained over 150% in just less than a month. Would you like to gain 150% if you were a long Tesla or a long IBM? So it's all relative. Now, I know a lot of you may be saying, well, Steve, look at this here, though. You didn't signal this. This was a sell. This bar, which is red, bar number 2, closed above the high of bar number 1. But if you look at the price, I mean, we're talking about a 70, 75 cent stock. I don't really think you'd want to go short or sell that, inexpensive of a stock. Most likely when you're trading really inexpensive stocks, you want to focus on going long rather than trying to short or sell into them, okay? Now, this is a really inexpensive, $1 stock that went up nearly 150%. We can also go to an expensive stock like this one, KLAC, which is 300. Here's what happens when most traders begin using technical analysis like trend lines. They'll say, well, Steve, look at this. This is a strong trend line. And I've had pretty good luck trading them. For example, when this breaks, I'm going to sell my position and get out. And so it breaks. And so you say to yourself, okay, well, it's time to get out. So should you really sell? Why don't we listen to what the market is telling us? We apply the PAT D once again. What are the colors of the down days? They're still green. So for all intents and purposes, even though we have some down days here, the market wants to go higher. This is our translator. What a great edge telling us what it wants to do. So if this is bar 1 and this is bar 2 closed below the low of bar 1, okay? So this is a buy setup. So this is why standard conventional technical analysis in its most, convenient form really doesn't have a lot of consistency. When you listen to the market through the translator, you have a lot better idea for consistency and a lot better chances. So we have a buy setup right here. Look what happened, 105 points, okay, coming into this month. And if you miss that, that's the beauty of this technique. It's always generating, giving you other chances to get in, okay? And remember, if you have, as I said earlier, if you have any questions, please wait till the end. We'll get to the questions at the very end, okay? Or try to write them down or remember them. Now let's look at sells, because this just doesn't work for going long. You can also apply this going short. Here's a downtrend, a so-called downtrend in GME, right? This was just a couple of weeks ago. Most traders would say, well, Steve, it's a downtrend. I mean, I don't like this stock. And, that guy in that trading room, though, says we're getting towards areas to buy. Well, let's say you were long this and you're thinking, boy, do I want to buy some more? I'm not really sure. Just hold on to it. Or maybe you say to yourself, you know what, that guy, he's really got a good name and he's well known or he's on TV. I guess I should buy some more. And look what happens. We have a really strong day. You say to yourself, you know what, that guy's pretty good. He is right. So on top of that, what do we have here? We have a bullish engulfing pattern, one of the most recognizable and most popular of candlestick patterns, because it's easy to see a bar number 2 engulfs the range of bar number 1. So this is a very positive sign here. So you say to yourself, you know what, I'm not only going to double up, I'm going to triple up. So you jump in and buy, and then this happens, right? What did you do wrong? Well, for one thing, you weren't making your decisions based off what the market's telling you. You're basing your decisions off of a candlestick pattern that really doesn't have a high level of consistency. You're basing your decision off some guy that's supposed to be a guru that knows everything. You weren't basing it off what the market was telling you. And what was the market telling you? Well, on our platform here, click on PAT D, it's telling us that the bars are red. You don't want to go long a stock if the bar is red, okay? Because you're swimming upstream. You're going against the current. And what do we have here? We have bar number 1 and bar number 2. Bar number 2's close is above the high of bar number 1. So where you thought this was a really positive bullish engulfing pattern, this was actually a sell. So if you were long, this would have been a good place to exit your position, and you could have saved yourself 5 points to the downside. Another example, as we look here in CVNA. Now, most traders would say, okay, we are in a downtrend, and if we apply the PET D, even though you think there's support, Steve, that guy I listened to in his chat room says that you've got to buy here. So even if the PET D is red, I know we're in a downtrend. This is major support. This is where all the institutions are buying. And the institutions are never wrong. I've seen, the software. I took that $10,000 class. You got to go with the institutions, and they love the stock here. That's why they're holding it up. And that's why you got to buy here. They're making the support. Well, when I was on the floor of the exchange, I was a specialist. That means that I had to take orders from not only just floor traders, but from institutions. And in my own opinion, the institutions had the worst track record of anyone amongst all the traders I traded with. So just off that alone, I would never base anything off what the institutions are doing. But on top of that, it doesn't matter because I'm basing my decisions off what the market is telling me. And it's telling me that it wants to go lower. In fact, it gave me a sell signal right here using this technique and another one right here. Now, sure, I could have gotten out right here based off that so-called support and made a nice little profit, but the market wasn't giving me any clue that it wanted to go higher. So if you decided to stay in, you could have potentially captured a total of 23 points. And even if you missed that, you could have gotten in later at all these places right here, okay? You see how this technique will continue to generate these setups all along the way. Now, I know a lot of you like to look at news. Listen, we're not here to tell you how not to trade. We're here to tell you what we think will help you and get you on that road to consistency. Now, I don't look at news. I stopped looking at news 4 decades ago. Trust me, I used to look at all the reports. I looked at everything, and it couldn't make me a dime. It wasn't until my mentors taught me just to let go of it and not worry about news that I started to become consistent. But let's say you are someone who needs, you can't cut the umbilical cord and you need to look at news. That's fine. I just want to let you know that oftentimes this technique will generate setups, positive setups, in advance of news events. So there's no need to worry about thinking that, well, I don't want to be in the market if a news event comes out because I may be on the wrong side. I'm not guaranteeing you that every setup is on the right side, but it's been my experience that they're usually on the right side prior to the news event. For example, as we look here, December 6th, just a few weeks ago, it was reported by Yahoo Finance that Gossamer Bio stock tumbles. The stock GOSS lost 3/4 of its value, 3/4 of its value today as the market questioned the performance of the company's experimental hypertension drug in a phase 2 clinical trial, despite an upbeat assessment from the company. So as you look at the chart here, this is when the news came out. Bad news, and look what happened. So this is why traders are always frightened of news, because usually they are on the wrong side. But what was the market doing prior to that news event? Well, sure, it had been going lower, but maybe that guy in the chat room once again was saying, hey, you got to buy this. It's hitting some major support, some major lows. It's too oversold. But if we listen to it, what the actual market was telling us, it was telling us way in advance, roughly about the 11 or 12 level, that it wanted to go lower. And it continued to tell us it wanted to go lower well before this news came out. And if we applied this technique, which I taught you today, look at all the places you could have gotten short, or at least exited if you were long the position, and saved yourself a good 9 points. Now, the stock basically fell 80% from where we had signaled it was going lower in just 1 month, okay? Or I should say that where the PET D translator had signaled. Now, here's a typical reversal pattern, all right? This is a Morningstar candlestick pattern. Let's say that guy you follow says you've got to buy a Peloton. This is a weekly chart, by the way, to show you that it works in any time frame. You got to buy it here. It's bottomed out. Look at this. This is a real positive pattern here. Time to get long this, okay? And then if you apply the translator is telling you the exact opposite, saying even though this is a big up week, it's still red. So there's no confirmation that this wants to go higher at all. In fact, if you look at this, this is bar 1 and bar 2. Bar 2 closed above the high of bar 1. So this is a sell signal. It's not a reversal. So take advantage of what the market's telling you, because you could have taken advantage of an 85-point drop on a weekly basis. You see, this is why most traders fail, because you're not listening to the market. Now, the market remained red on this weekly time frame, and you still had numerous chances to either use these as exiting points or to go short. Now let's look at some other markets and time frames. Not everyone just trades stocks. So some of us trade as investors, they trade stocks, or some of us trade other markets. Let's look at an hourly chart of the euro yen, okay? Once again, classic trendless market, right? Market's going sideways on an hourly time frame. Let's wait till it breaks out one way or the other, right? Because it's not telling us anything. Well, not really, because once we apply the PET-D translator, it's telling us that even though it's going sideways, it wants to go higher. It's like coiling, springing up to go up to the upside. So you need to apply some structure. It's not just good enough just to say, well, I'm going to buy at the market. That's really not a technique. You need some structure, and the structure in the form of this technique I'm teaching you today. And here we have two buy setups right here. Bar number one, bar number two closes lower than the low. There's a buy. Bar number two closes lower than this low. There's another buy. So you had to wait a few hours, but the next day you could have potentially captured 200 pips. That's 2,000 potential dollars per unit. And there was another buy right here had you missed those two. We can look at a monthly chart of the QQQs. Okay, let's say you're an investor and you like to follow the market. You say to yourself, well, Steve, I know what the market's doing. It's going higher. I really don't need to listen to the market. It's going higher. But then you follow it and then this happens. So what happens to all your long-term investments? Okay, you can apply the translator onto monthly bars as well. Okay, it was telling us, sure, we're in an uptrend, but then it changed and then it went into a downtrend. So using this technique on monthly bars, you have a setup right here, bar number one and bar number two closes below. You could have potentially, if you bought there, made 50 points to the upside, which represented thousands of NASDAQ index points, because this is the ETF that represents the NASDAQ. And if you got out and switched, you could have used the technique to potentially capture 60 points or thousands of points to the downside. You see, you don't really need to trade QQQs monthly. You could use this as a market directional tool to help you make your trades. Let's go back to the currency pairs. Here's a 1 hour chart of the British pound. Obviously, in hindsight, this has been going lower. How could we have taken advantage of it? Well, we applied the translator and we knew well in advance with consecutive red bars that it wanted to go lower. Okay, this was just a couple of weeks ago. There's nothing to figure out what's going on economically, nothing to listen to the blogs, what people think about currency pairs. On this hourly chart, it's telling you it wants to go lower. So now all you have to do is apply some structure in the form of this technique. Here we have bar number one. Bar number two closes higher than the high of bar number one. So there's a sell. And then if you miss that, there was another one right here. This bar closed higher than the high of this. So there's another sell. Either way, you could have potentially captured, once again, 200 pips to the downside, roughly 2,000 per unit. And lastly, as we look at a daily chart of gold, here's the XAU USD, symbol for spot gold, I believe. Obviously, it was going down, right? Most traders would say, well, I don't want to touch gold. It's in a downtrend. But if we go through the process and apply our translator, what is the market really telling us? It's telling us that it's been going down and that this is not something to look at as negatively. This is a buying opportunity because the bars are green. So this is a buying opportunity. Now we look for that 2-bar pattern. Here's bar number one. Bar number two closes lower than the low bar number one. So that's a buy setup. But then we have another one. This bar closes lower than the previous bar. That's another buy setup. And still another one. So I'm not telling you to continue to buy each and every one, but you had multiple chances to get into gold before it took off. And if you still miss those, this is just a couple of weeks ago, what happened in gold. So it really makes no difference what time frame, it makes no difference what market, and it makes no difference which direction you're trading in. So let's recap what we shared with you today. If you're going long, the buy setups are you're looking for 2 green bars that are generated, okay? Then bar number 2 in that 2-bar setup must close below the low of green bar number 1. That's it. That's a buy setup. You can buy at the market. You can buy calls. You can place a limit a little bit lower if you like. You can place a limit at the close. And it's up to you. But this is a high probability setup. Now, whoops. There you go. Sorry, I jumped the gun there. If we're looking to go short or to exit a position, we're looking for 2 red bars that are generated. And then bar number 2 in that 2-bar setup must close above the high of red bar number 1. This is telling you the market wants to go lower. It's a high probability setup to either exit your long position or to go short, buy some puts, short the stock if you like. Now I want to ask yourself a question, and ask yourself honestly. There's only 1 week remaining in 2022. Can you believe it? Just 1 week left. Do you think this technique can help your trading beginning in 2023? Think how simple this technique is. Everything I shared with you, our students who are already students of the Pet D could have taken advantage of right now. And these are all things that happened within the last couple of weeks, the last month. Don't you think there's going to be a lot more setups coming in 2023? There's going to be tons of them, regardless of market, regardless of time frame. So I think you are interested in this. So we have a great attendee discount today for all of you coming to today's presentation. All right, here's what we're going to do. We're going to give you our roadmap for any market discount. This is the Pet D, the Primo Early Trend Detector. It's our roadmap for any market. It's a proprietary color bar algorithm. This includes the add-on. You have 2 continuation trading techniques. I just shared with you one of them. We're going to give you a total of 2, and you're going to get 2 pullback trading techniques. So you're going to have 4 techniques all together. All right, all together. Plus, we're throwing in an extra trailing stop technique. So there are different ways to apply the Pet D. There are literally dozens of ways to apply it. You're getting a total of 5 different ways to apply it to any market, any time frame, okay? And you can apply your current strategy to this as well. Now, on top of this, we're already going to include another bonus. That's till this Friday only, for the next 2-3 days. If you sign up for this great offer, you'll get a full free year of the platform. So you're not only going to get the whole Pet D course with all the things we explained in it, but you're also going to get the PTS Primo charting platform, the educational tool that teaches you how to trade. And the reason why this is so important is because this platform is unlike any other platform you've ever traded with before. It's because many of the tools, techniques, and strategies on the platform that you'll be able to apply are things I've taken from the floor that you will not find on any other charting platform. I'm talking like Metastock, TradeStation, Thinkorswim, any of the major platforms, because you're only going to find them on the PTS Primo charting platform. Things like one-click access to the Pet D are enhanced by Sell Line, which instantly has 4 different ways for telling you the overall trend. A strength of trend tool that has an uncanny ability to oftentimes to find out when a trend is dissipating, running out of gas, or if one is just beginning. You get signal scanners. You can scan for all the stocks and all the universe of stocks. You can scan for currency pairs, futures. You can even scan for Bitcoin for all the stocks that are green or all the stocks that are red, okay? We have different entry levels, different stop placements, auto-generated exit levels included, and this all comes with personalized tech support. This is all going to be yours free, included, if you sign up within the next 3 days to become a student of mine in the Pet D course. Okay, so let's break it down, this roadmap for any market special. Now, normally, the Pet D course and application will cost close to $5,000. This is normally, but we're not going to charge you that today. Now, the Pet D course and the application would normally cost you close to $6,200. Once again, this is normally, but we're not going to charge you that today. In fact, we're reducing the price by $2,100, over $2,100, down to $39.95. But on top of that, this includes payment plans. So if you can't come up with $39.95, that's okay. You can still be up and running as early as today if you like. All you have to do is negotiate a small deposit with ProTrader Strategies. They're in charge of all the discounts and pricing, and you can still be up and running, and that also includes the full year of the platform. Remember, there's only 1 week left in the month. Give yourself the holiday gift of trading consistency for the very first time. I know we all make promises to ourselves where we want to be at the end of the year, so we're right there right now. Are you anywhere near where you promised yourself you'd be in January of 2022? Most likely you're not, and that's okay. That happens to a lot of traders. Our goal is to get you there. Our goal is to get you to become a consistent trader. So take advantage of this great offer and give yourself a gift. You've worked hard. You've searched for this. This is a great trading technique, a great way to take your trading to the next level, okay? Here's how to do that. Contact my sister site, ProTrader Strategies. They're in charge of all the discounts. They're in charge of all the pricing. They can set up a payment plan with you over the phone. So I would highly suggest giving them a call at 310-598-6677. If you see that link below it, that is the link that will take you to the info page for more information on the Pet D. Also, if you'd like to sign up online, it's not a live link, but we've just posted a live link in the chat box. So all you have to do is go to the chat box and click that on, okay? Now remember, there's absolutely no obligation. If you're interested in this, you can contact Pro Trader Strategies. They have training consultants manning the phones. There's absolutely no obligation. They would give you a quote over the phone. The only thing is you can think about that quote for the small deposit. But remember, you won't get the full year of the platform if you think about it for a couple of weeks and then call them back up and say, hey, I'm interested in this. Most likely the price will go back up to close to $6,200 if you want the same offer. But if you want to pay in full, it's only $39.95. That's close to $2,200 off. Or I would actually suggest negotiating a payment plan with them, a small deposit. I can't tell you how much because that's what they work together with you, but a small deposit and you can have a payment plan set up and you can be up and running as early as today. You already know this one technique that I taught you, okay? So give them a call, 310-598-66. Now, I promised you that I would answer any questions. So if you have any questions, kindly either go to the Q&A box, the question and answer box on the platform, or you can go to the chat box and I'll answer them to the best of my ability. Someone's asking, Steve, are the PTS red and green bars translated from traditional candlesticks, such as the green bars, the closes at the bottom, and the red bars, the closes at the top? Thank you. Good question. And the answer is no. I have taken this because when I was first taught candlesticks some 4 decades ago, this was before they were actually well known in the United States. Most of the people that I knew from trading, I was still on the trading floor, we're learning about candlesticks from a lot of the Japanese traders that were coming over from the Far East, and they were working at banks and they were using them, and they were the big talk, and everyone was like, what is it with these candlesticks? What does it mean? And so I had someone from the bank explain it to me from an Asian bank, and it was very difficult, myself included, to understand how this worked. I'd never seen anything like this. We were always just accustomed to open, high, low, close bars or line bars, line graphs. And so what they explained to me is that the traditional way in which to look at candlesticks is to have a blank white scroll. In fact, the person who taught me actually had it on a scroll. It wasn't, we didn't have high-speed computers then, and we didn't have platforms like this. And so everything was mainly on graph paper. And what they kept was a long scroll of white paper. And they constructed their candlesticks by having the same candle wick, the open and the close. But if it was an up day, it was just a black outline. And the white background designated that it was an up day. And if it was a down day, where the close was lower than the open, they just filled in the body. It was called a dark body. You'd have an open body and then a dark body for a down day. Now, when they introduced this to the West, most people, myself included, it's very difficult to understand the concept, couldn't get it. So what these companies did when we started having more and more platforms, what they did, they said, listen, let's make it easier for the Westerners to understand this. When it's a down day, we'll color the bar red. And when it's an up day, we'll color it green. So that way they can understand this concept better. And so for all intents and purposes, this is what most people think are candlesticks, but they are not at all. If you go to the East and look at how traders in Asia trading candlesticks, they don't have an up day being red and a down day being green. It's basically a body behind that, whatever the screen color is, and an up day is just an outline, and a down day is filled in black. So I kept the traditional way, the way I was taught. So if we look at any of our bars, if you don't mind, let me just go back. I'll explain that to you real quick. I know this is the reason why I'm spending a lot of time on this, is because this is one of the most common questions I get. So as we look here, this is the common way, this is the most prominent way in the East that candlesticks are. You have up days that are called open bodies, and they're just, they're up days because they're the same color as the screen. And the down days, which are the dark bodies, are just filled in dark. Now, when we apply the PET D, we get 3 down days in a row, okay? They're all dark. And look, once we apply the PET D, even though they're 3 down days in a row, they're all colored green. So this is the beauty of being able to apply the PET D. We're not concerned. We know already whether it's an up day or a down day by using the traditional form of candlesticks. But the PET D tells us whether the trend is still up or the trend is still down. So in this case, even though we had 1, 2, 3 down days in a row, the pet D was calling them green. So we knew right off the bat that the trend is still up, and the market's telling us it still wants to go higher. Don't get confused and taken in by some guy on TV or in a chat room or some bad earnings that this is topped out. The translator is still telling you it wants to go higher. Now, if you allow me just to go fast forward here real quick, sorry about this, but I just want to have people, if they're interested, to be able to see that phone number and copy it down. So I hope I answered your question. This is the traditional way. We use candlesticks the traditional way, the way I was taught some 4 decades ago, and it's a lot easier to show the pet D. This style is often called hollow bars, okay? But it's the traditional Japanese way of using candlesticks, but the West calls them hollow bars, all right? I hope that makes sense. It's a good question, and I hope I answered it for you. Anyone else? Let me see. There's a couple more questions. Let me just open up the question and answer. Let's see. What is the difference between the pet D fast and the pet D slow? That's a good question. For those people who don't know, the pet D comes in 2 formats. Obviously, pet D fast or pet D slow. The pet D fast is actually, we renamed it the pet D fast. When we originally had the pet D, it was just a standard pet D. Okay, and then there's a pet D slow. The pet D slow is just, as the name implies, just a little bit slower in coming up with its calculations. It's not as quick as the calculations of the formula for the original pet D standard. Now, pet D standard is mainly used for entering into trades, for confirming, for telling you when a setup has been generated. It's a great tool, not always 100%, but that's normally, overall on average, it's used for entries. The pet D slow is used for once you're already in the trade, and it helps for you to be in the trade longer, or to use for the stop technique, which we teach you in the course. So that's the difference. But there's nothing written in stone. Some of our students say, listen, I use the pet D slow for everything, or I use the pet D fast for everything. Others mix and match. That's fine. Remember, our goal is for you to make the decision. These are just 2 more variables to help you make a decision. We want you to decide, okay? Another question, you didn't talk about the buy-sell line. Does it apply or not for this? Good question. The buy-sell line, for those of you who don't know, is the way in which we determine the overall trend, okay? Now, the pet D, because it's so sensitive, is used mainly for the short-term trend. So therefore, once again, if you wanted to be more conservative, if you wanted to be more conservative in terms of being more in sync with the overall and the short term, well, then you would apply the buy-sell line, which once again, you'll only find on our platform. So conservative traders, traders who want to be a little bit more sure, who don't maybe want as many signals, would apply the buy-sell line with the short-term pet D. More aggressive traders or traders just want to take the signals, we just use the pet D. So once again, as we always say, it's entirely up to you. There's no one right or wrong. The only right or wrong is when you follow someone without applying your own persona or your own input. So we want to present you with these variables and then let you decide, okay? Also, someone's asking, would this apply to intraday futures, 1 minute and up? Sure. I apply it to intraday futures. That's how I was using it today. I had a really nice setup when the market was going up on, I believe I was looking at a 5-minute chart. I personally don't like to look at small, like 1 minute charts unless there's a nice strong trend. So as we saw this morning, the market went straight up, and that was a nice strong trend. So you can use those smaller time frames. But when the market, sometimes in the afternoons or even different months like summer, kind of dries up and there's not a lot of volatility, I wouldn't suggest using these type of techniques on very small time frames, because you're going to get whipsawed. And that's with anything, any method, any technique, any strategy. The smaller the time frame, you're going to be subject to a lot more noise and a lot more whipsaw, okay? So you just, once again, that's why we instruct and we require that all of our students first paper trade. We don't just want you to say, oh, Steve says this work, I'm going to try this on a tick chart. You know, you have to paper trade it first to see if it can coincide with a certain market and a certain time frame, okay? I mean, it will work, but just to see if it has a higher level of consistency as opposed to maybe going in just maybe a little different time frame, that's all. These are things we want you, we'll work with you and we'll help you come to a decision, but we want you to decide. No one should ever tell you this is the best time frame. No one should ever tell you this is the best market to trade. No one should ever tell you this is what you should do today, buy this stock. No one should ever do that. Just the same way no one would want to go on a flight across the country, and then have the airline pilot come over the intercom and say, hey, what does everyone think today about me flying? How do you think I should fly this today? Or how do you think I should land it? But that's what traders do. We all are trained to do this, to ask people, what do you think I should do? Do you think I should buy this? Do you think it's going higher? I'll go to that, I'll read that blog, or I'll go to that trading room to find out. That's a recipe for disaster. I know from firsthand experience, I did that 45 years ago. Does not work. That's our goal, to put all the information in your hands to help you make the decision, okay? Good questions. I hope I answered them properly for you. And remember, this is a great tool. I use this tool. I probably would say, and this is something I don't usually do, there are two things that I really recommend the most to traders. That is strategy number 4. It's a strategy I still use. It's a great strategy. We're not talking about it today, but it's a great, great method, along with the pet D. These two things, I think, are the top of the top, or they're right there with all the other products we have. And so this is a great offer today, especially if you want to establish a payment plan and you want to turn your trading around for 2023. This is a great way to get it going. Remember, give yourself a gift, the gift of trading consistency at this great discount. Okay, if there are no further questions, as we close here, remember, there's absolutely no obligation. You can call Pro Trader Strategies, get a quote, but don't worry, you don't have to feel frightened. I don't want to call them because they'll sell me something. That's up to you. They're simply there to work with you. They're very transparent. On top of that, they're very easy going, and they would be happy to work with you. The only thing I would say is you just can't sleep on this, because 2 weeks from now, this offer is going to be gone, and you won't be able to get that full year of the platform. So give them a call at 310-598-6677. If you want to click on that link below, just go to the chat box. There's a live link there posted, and you can click that on, and you can see more information about the pet D and the offer, okay? As we close here, we're going to take one last look at our disclaimer. I just want to thank you so much for taking time out of your day. I know you're very busy. I know you'd rather trade, and so you didn't have to come here today, but I appreciate it. I really want to teach you, because my goal is really to help all of you become consistent traders for the next year, okay? So thank you so much for showing up, and most likely, we're going to be giving these every week, so don't worry, we're going to have different presentations, but we are going to be giving different products. So most likely this offer will be gone within the next week or so. So please take advantage of it if you're at all interested, okay? Thank you so much for attending. I wish you the best of luck, and I hope to see you in the Pet D course. We'll see you next time. Bye-bye.